Thanksgiving is almost here, and that means that markets moving into and out of this particular time can tell us a lot about the rest of the year. Today, we talk about the stats that we need to be watching together, along with the big next year calls that are starting to come out from some of the big houses. Bank of America believes the S&P 500 is heading to 5,000 in 2024. Will they be right, or are they about to be wrong? And more importantly, what does that mean for the current rally that we have on markets? Small rejections after making new highs were placed on both the S&P 500 and the Qs in the last 24 hours. And we know that the VIX is approaching a new all-time low since 2020. This is the time when you need to start getting cautious in markets and start looking to some of the other lead indicators. Today we'll be talking about them, including the big one here, which is the US dollar. What happens if it gets past 104.50? Let's discuss stocks, commodities, and cryptos together right now. Well, welcome back, everyone, to the Daily Show where we discuss markets together. We're always covering the macro, the lead indicators, and of course, the hottest charts for all of us out there. So if you like anything to do with markets, remember to subscribe and smash that alert button. Let's get into what happened over the last session. I think the first thing to bring up straight away has to be the fear and greed index. We're still moving into the greedy area, and possibly we're going to get into the extreme greed area very soon. When we go into that point, that's when we need to be ultra cautious. And of course, we'll update you when we believe that is occurring. Another quick reminder coming into this Thanksgiving, we are, of course, launching our free VIP weekly newsletter this weekend, and there are still a few spots available for our beta test of it. Make sure, links in the description down below. It's as easy as name and email address, and you'll go in to receive that particular freebie. Let's move over now to the stats moving into Thanksgiving and out of, before we go through some of the big lead discussions of 2024 investing and trading. First up, we have the turkey wrap. We mentioned this in the previous video, and so far the turkey wrap is coming true. In previous weeks where we saw a positive release from the markets, that is a positive gain, we generally saw the Wednesday and the Friday, and by the way, yes, Thursday is closed on the market and Friday will be a reduced session day. I think it goes to like 1:30 or 1 p.m. in the afternoon. We tend to see a positive correlation. In fact, it was 30 and 0 over the last 50 years when we had a very similar setup. We also know that when it comes to Thanksgiving week, the Wednesday is usually a positive session. So far, so good on that one. And that sometimes the Friday can eke out a small positive session as well. So just remember that, yes, the odds are in the favor of bullishness. But I want to discuss a big topic right now, which is one that I don't think enough people are discussing. I posted this over on our X account, Twitter, for anyone that isn't aware of what happened there yet. And it's just showing you some really random stats, but also some big things that could be occurring over this decade. Let's see if you agree with this comment. So 2 stocks in the S&P 500 make up almost 14% of the market cap. In comparison, the metals and mining industry is only 0.2%. Now, you could argue that's because a few of the biggest metal companies in the world aren't listed on the S&P 500, but here's where the stats get a little bit wilder. Have a look at this one. This is commodities to equity ratio. Now, if you know your stuff, equities have been doing way better than commodities for a very, very long time. Effectively, we can see here that we have periods of time with huge commodities booms, and then we have huge commodity sell-offs. Now, we've been in a sell-off for a very, very long time for now, but when markets tend to turn, there is a kind of standardized time between usually the turn point and the gain, and it seems to be about a +7. Now, notice that we always go into a euphoric period during this time. That's going to be a few years away if this is to occur. But have we actually bottomed somewhere around 2020 late? That's after, of course, we saw the massive crash, we saw the recovery in commodities, and since then we've seen the beginning of potentially sticky inflation. If we're in stagflation, the answer is most likely yes, we have seen the beginning of a turn for commodities, but this is a space to watch and something we will be looking at quite a lot over the next year if we tend to see some outperformance happening. We've already started to see a bit of a pickup in things like copper and, of course, iron ore stocks, which we've been discussing now for a few weeks. Will it continue through to 2024? Let's also talk about the Fed's pivot. Of course, you may have seen this in the previous video, but it's really important to discuss. It's not just what the Fed is doing, it's also what the other central banks of the world are doing. Now, you'll notice that there were hikes and hikes and hikes and hikes and hikes, and that all started to change around the middle of 2023, with cuts overtaking hikes for the first time in October and November. Now, this is a big stat because it tends to lead into a global policy loosening. Now, this is what we're seeing, and we've started to see this switch about a few months ago. And when the markets loosen, and of course global policy loosens, we do tend to see equities potentially outperform during those times. It's something that we need to be watching, and it's going to perform into one or two sectors a little bit differently. This is another share over on our X account, links in the description. And what it is it's hiking cycles versus easing cycles. Now, little wonder why small caps have been getting absolutely destroyed. If you've looked at IWM performance this year, it's plus like maybe 2 or 3%, maybe even negative for the years to date so far. However, at the same time, the US 500 and the NASDAQ are up a ridiculous amount. NASDAQ well over 40% plus positive to this particular video date. So what happens if we do go into an easing cycle? Well, we tend to see what we call rotation. And this is something that the market has already started to think about. Notice here we have the tightening cycles with the gray area, and then we have the easing cuts or QE with the blue area. Now, not always, but it is fairly traditional that we do tend to see a bit of a pickup into these events, or at least coming out of them. And actually small caps tend to do a little bit better. For now, mid caps could be the most interesting market though, because as we've talked about, the Russell 2000 did a plus 5% day only a week ago. That's something that's not good. And when you see a plus 5% day, it's actually symptomatic usually of a bearish kind of recovery or a flash recovery. And we can see here IWM breadth actually boosted all the way to almost a 90 reading. Now, similar times when we've boosted this high, we've been in a bit of a sell-off. Now, that doesn't mean the market's at the end. Of course, over here, we boosted to a new high, we dropped off, and then we recovered after that. So that's kind of the scenario I think we're playing with here in the Russell, and it makes sense to the time of year. You can see here the seasonal patterns over the Russell over the years. Last year, this certainly wasn't the thing that to be watched. Of course, it didn't end up happening, but we do tend to see that mid-December, which is coming up. We're only about, 20, 30 days away from that now. That's when usually the Russell starts to take off. Will it do so again? Let's also have a look at what the Fed pivot would mean for the markets. Now, I've brought this up quite a few times, but I just want to reiterate it again. 5 months. If December doesn't see a rate hike from the Fed, in history, that has meant that we have never seen another rate hike. Yes, in all other 14 cycles, once they've gone past 5 months of basically just holding the policy, that usually means it's done and we tend to see cuts. But a cut may be not positive towards the markets. In fact, 11 of the last 14 cycles we saw this in ended up in a recession and no soft landing. Of course, this time could be different, but regardless of whether we get a soft landing or not, in all but one circumstance, the market still had pretty decent corrective dips. And a correction is negative 10%. Of course, a crash is considered negative 20% or more, or bear market. And on average, they went down 23.5%, and it took 195 days. Some interesting stats to play out, of course, for 2024, as it's going to be, I think, a wild time for traders out there. And of course, follow the channel because we'll be covering this. A good way to see the Fed pivot is usually the US 10-year. And I would argue that already we have seen the 10-year leading the charge on saying, you know what, maybe we have hit the top in peaks. And of course, there are many stats to go with that. So why is the market rallying right now, and how can we stop it? Well, the answer is quite simply, based on the stats, it's very difficult to do so. If you think about it, the S&P 500 performance after a winning streak of, I think we were at plus 8 days, doesn't tend to end with a big pullback. It actually tends to melt up for a period of time, and it leaves people scratching their heads and saying, how could this be possible? Well, unfortunately, it is possible, and we'll look at the markets because at the moment they're what we call dull, and dull markets are incredibly hard to short. So we'll look at the key levels of when the bears could really return back into this market soon. Another thing to note is, of course, the VIX. So far, we've gone slightly higher, so we're kind of around in this point here. And traditionally, in the last plus 6, we've seen a weakness sometime afterwards. So will that happen? If it is going to happen, it usually happens in the first 15 days of December. So we'll find out whether VIX is one of the triggers towards a potential little pullback. Of course, here's what traditionally happens in pre-election years on the markets versus normal years. And I also want to discuss another thing which has to do with treasuries. Now, again, you might see this as, this is going to mean treasuries are going down. But as we reported on this one, treasuries have actually driven higher each and every day pretty much since this report. And this shows you the first outflows from treasury funds since February of 2023. Now, I've argued a few times here that that's actually a positive sign for treasuries, and it often marks a turning point. And here you can see funds losing hope in buying treasuries, and funnily enough, it starts to turn. Remember that most funds eventually get it wrong, and actually, in fact, 85% of funds, I think, lose over the long term against the index. So really, when everyone's doing something, and I mean everyone, including the fund managers, including the big banks, including everybody else, it often can be perceived as the wrong thing. At the moment, they're all kind of getting out of treasuries, but at the same time, we're seeing prices drive higher. An interesting time. They're selling into this rally, but history would tell you that maybe there's a little bit more to come. We'll find out whether that stat holds true in the future. We've also been talking a lot about gold. We're sitting just underneath 2,000 an ounce at the moment. And of course, this has to do with also everyone turning net short and then us seeing a huge rally. Now, let's have a look at another thing here, which is, of course, high yield bonds. Now, we've seen some large transactions coming in on bonds at the highs here. And this is one that we've been watching. We'll take a look at bonds when we look at our charts very, very soon together. But basically, the bonds, they're right back at the peaks, and they've had a great run. I mean, junk bonds have had a great run. This is, of course, a resistance or a supply level, and we've seen several trades around here in the past. Now, these levels are something that we need to be looking at, and we will be focusing in on bonds quite a lot over the next week. Let's talk options now, and it was a day of lackluster options. Still a lot of calls coming in, so again, people getting trapped into the calls. You can see that the calls were mostly centered around the under 10 days in terms of stats, so we know that they're fairly close to the current price. And we can also see here that it's all call related. Now, which were the stocks that were seeing unusual transactions? We saw another day of Chevron getting a lot of transaction value coming through 1.7 times the normal value. And we also saw a few different moves on things like solar and also a couple of banks. Microsoft also getting us some play on it as well, thanks to the OpenAI drama that continues to go on around the markets. The problem with the OpenAI drama can be that it doesn't necessarily give you edge unless you're a longer term investor and you see the bigger picture. Maybe they've lost key staff, etc., etc. I'm not getting into it. But of course, CRM may be a slight winner out of this. And there are, I'm sure, other companies that are going to do okay. Let's talk about what's going on from the perspective of the last 24 hours. Now, I would say this is +2 for defensive moves. We've seen staples. We've seen bio, which is nice. Good to see bio actually up there. Utilities and healthcare. Now, these particular ones, not so much bio, but the staples, the utilities, and the healthcare, these are the defensives. So that's +2 to the defensives for now. And it takes our 5-day rotation now to seeing almost all the performance in the more defensive sectors, with gold leading the charge up here. Now, if this continues to hold up, remember when we get to a +2 or a +3, we start to get ultra cautious on the dull rallies, because that means that there's some rotation, some circular rotation going in underneath the hood, and we need to be very aware of when we get triggers from a technical perspective. In terms of bonds, from the perspective of the indicator that I tend to use, we are seeing still a very strong rally here coming through. And of course, it's showing you that at this stage, the market really means business and we're seeing some strength. From the junk bond perspective, we've just seen it go back up into the highs. And this is where I would expect some consolidation or resistance to occur on junk bonds. So something to be watched. Mark out 76. That's going to be an important level. All right, let's move over to advanced declines now. So we saw some advances across the board, and that, of course, brought with it some decent transactions across the equal weight as well. You can see here the equal weight is improving, and that shows you that breadth is actually still doing relatively well in the market. It's good to see some rotation, and as we expected, it's not really the super caps that are super leading the charge at this stage. Mid caps are starting to take over as basically the algorithms and Wall Street and the robots and everybody, they're all moving into what's going to net them the best next. We did see a small increase in treasuries moving towards hopefully a 93 gap fill. And then we also saw put call ratio still in the middle of the range. So not too much to get from that. What about our lead indicator from effective yields? Still down, showing rallies can still happen, and no edge from this particular indicator yet. Dow Jones Transportation Average continued to have a little bit of a struggle around that previous high, and we probably should set alerts above this just to show further melt up breakouts if we do get above that zone. Home builders still stuck within our range, so no edge on this one, guys. And of course, our squiggly lines continue to show central banks around the world injecting the secret funds and basically showing us that, yes, probably something has broken. Because remember, the Fed will never pivot out of the goodness of their heart. I posted this over on our X, and I said the Fed will never do it out of the goodness of their heart. They'll only do it if they break something, and then they will panic react. Well, it does certainly look like central banks around the world are bringing in the stimulation because they probably have pushed rates a little bit too high, and that's starting to have serious effects on companies that have bad financials. Zombie companies are dying everywhere, and we'll do a special on that soon. Dying everywhere. They're everywhere. And there's something like a statistic of like 15% of the Russell or something is actually zombie companies that will all die. So you've just got to remember that there is a serious concern about how many delinquencies we're going to see moving forward and bankruptcies. Let's move over here to copper. Just a little pullback in copper so far, still holding into the bullish trend. And the US dollar was the one to watch along with the Russell over the last 24 hours as the dollar came up to the supply. So let's have a look at the small time frames here. We'll go to the 2 hour. So this is, of course, the supply. This is a level of previous selling. It's a drop-based drop. And then we rallied into that and we've seen sell-off. So if the dollar is able to breach past this high here and close, it's probably going to have a go at this 104.50. Now, if it gets above 104.50, that actually could be a bear signal for markets because it'll show you that the US dollar is moving towards strength, and that is going to potentially mean money is flowing out of stocks and into the dollar once again with some take profits coming through. This, along with defensive moves in the market, is something that makes us cautious in the bullish run. But of course, we can't predict that it's over yet because at this stage, we still are rallying on the stats and we're also rallying on the dullness. Let's move over to GDX. We know that's an inverse head and shoulders. And of course, I've been pretty bullish on the old gold stocks recently. And if you move over to gold stocks in general, we rallied above this point. We sold off a little bit. But for now, it's making a series of higher highs and higher lows. And to get above 1994, I think is kind of triggering in a new high. So I wouldn't be surprised at all to see gold above 2008, at least in my opinion, and pushing into those all-time high levels over the next coming months. It's something that I expect if we continue to see rates dropping off as they have been. US oil did rally, then drop massively, and then rally back up. I would call it neutral at this point. Of course, this is where you see the buyers coming back in for oil, most traded zones, oversold. I think it's kind of in consolidation at this point. Hard to trade on the smaller timeframes, in my opinion, but if you're doing well there, good work. And Tesla actually sold off. I thought this might have kept rallying up a little bit, but it's a really hard read at the moment. As I've mentioned, I'm really neutral on this pair. I like down here, which is that price of around 222. And I like a breach to get into the 260s. But at this point, yeah, very, very tough with Tesla. So it's more of a day trade, really small time frame if you're getting involved in it. As we mentioned with NVIDIA, it does have this kind of history of selling off after the earnings. And actually, it made some small little time frame changes. Now, remember number one. Number one, it made a new high. Now, this is traditional. We've gone back 2 videos ago. We talked about how NVIDIA loves to do this, makes a new high, everyone gets hyperactive, and then it goes down. Remember, it might be an exceptional company, it might be an exceptional investment hold, but from a trader's perspective, you're starting to see the signs of weakness. So pullbacks could be met by bear demand at this stage, and we might be going back to the center of this overall channel range. So yeah, I do think that this is the first signs of weakness from NVIDIA. I don't personally short it semiconductors because it's too hard and semiconductors are beast mode, guys. But it is the first signs of weakness. So for buyers, maybe we're going to get a cheaper price relatively soon. Let's have a look at the Australian market. All these bullish hammers still barely holding up. We've got a long leg doji with the long leg doji. I mean, this market, seriously, is it even following itself? It's the question mark of question marks, and it's going to follow the US 500 pretty much. So look, 7,000 remains where the buyers probably are for this. And at this stage, we don't have too much opinion other than it's technically bullish with information as it comes through. The DAX, one of the most shorted markets from retail traders, pushed to a new high, probably crippling a whole bunch of shorts. I wouldn't be surprised at all to get slightly above this red box and then maybe start to find some weakness. It's been one of the best rallies through the market, and since around this point, retail shorts have been massive. So unfortunately, a lot of people are short the DAX, and they're just getting destroyed at this stage. And this tends to be what happens when you see this type of thing. Let's move over to the US 2000. What's going on there? Well, you can see that the US 2000 has been the weaker of the indices, and it's still holding up. Last night, we were talking in our Market Masters Club, free 7-day trial if you're interested in the links, and I was talking about an 1800 short here. Although I'm not huge on shorting the market, that was a decent level to have a go at it with stops above here or here. And look, at this stage, a lot of people are going to be drawing this as a triangle or a pennant. It could break to the upside. Shorting a bullish market is very, very tough, but this zone in here was the one to be targeting. And at this stage, it really hasn't followed through. I'd like to see it below 1780. That will give definitely some credence, though, to further sells maybe across the US 500 and the Qs. So US 2000 still one to watch with the alerts. Now, the Qs, they actually sold off. You can see here's the rejection wick as the dulling market continues. Very difficult to have a go at this market because, of course, has there been a lower low? No. Has there just consistently been higher highs and higher lows? Yes. Is this a resistance point? Sure, everybody sees that. Has it pushed people into losing their shorts? I would say yes, because it keeps pushing past this level. So it's probably liquidated a lot of people over the last 24 hours, unfortunately, and those people will not be happy. Hopefully it's not you. And yeah, that's what it's probably doing. However, to short this is going to be very, very difficult. And you can see here on the futures market, there's just no evidence to say it's short yet. You might be able to set an alert underneath this level as a temporary kind of zone, which is 15,738. But yeah, very, very tough. It's just making a series of higher highs and higher lows. S&P 500 is very similar. We actually got a gap open, so you can see there's another gap, and it's gone for this one here, but not quite got it, which is 45.75 gap fill on the top. The stats say that on Friday is usually a slightly positive day. Of course, December, the start of December can be a little bit shaky up until the 15th, and this is where the market is at this stage. US 500, still a series of higher highs, higher lows, as we mentioned in the previous video. I would have loved that. That would have been sweet, but we didn't get it. So at this stage, it's still just bullish. There's no sellers yet. Really, it's just the Russell that's showing us that weakness underneath the hood and the rotation to the defensives. +2. Let's see if we can get a +3. That's a really big point for it. As always, guys, make sure you're aware of the news. Of course, I do want to say a happy Thanksgiving to everybody out there that celebrates that, and I hope you have a great time with your family. I wish I could be in the US and get into those festivities because it sounds like it's a lot of fun. When I was over there this year, a lot of my friends and people that I know, and obviously you guys in the community, were really looking forward to the holiday. So have a great time. I saw those inflation figures, though, on turkeys. They're up 32% since 2021. So hopefully you can still get the turkey or whatever your favorite Thanksgiving snack and dinner is. And do remember that Friday is still a shorter day. It goes to about 1 to 1:30. So flash servicing PMI is going to be the major news for that session. It does tend to be a bullish session. We'll find out whether it can get some Thanksgiving cheer. And also, just a quick reminder, make sure to jump on in to our free weekly newsletter. There's still a few spots open. That's there. And we will be also launching a special for our courses, Thanksgiving, Black Friday, Cyber Monday. Of course, we have to do it for you guys. So if you're interested, you can jump on over to our website. We will be doing a launch for the Black Friday. And of course, we hope to see you in one of our courses soon if you want to learn more about markets. Otherwise, we hope to see you on the channel. Subscribe, smash that alert button. We'll see you in the next one. Bye for now.